Hey everyone, thanks for tuning in. Wanted to share with you some of the investment trends that we've seen going on in the market for this week, the week of September 11th, 2023. So first and foremost, this week was jam-packed with a lot of inflation data that came out. And the majority of the inflation data that came out actually exceeded expectations. However, the market reacted in a little bit of a confusing manner, and stocks continued to go up on those days when inflation readings came in hotter than expected. So a lot of the positive sentiment that came back from these inflation numbers was that the rate that these numbers were going up was slowing drastically, and that inflation overall for this year has continued to drop. So a lot of this leads into what could happen next week with the interest rate decision for the Federal Reserve meetings. That will be next Tuesday and Wednesday. Now more people are still forecasting in that we will see a 25 basis point interest rate increase at some point between now and the end of the year. May not happen at this next meeting on Tuesday and Wednesday. That's still to be determined. They could take this month off and then maybe raise them again in November. Also, big investment news this week. So labor and fuel costs are up, and they're starting to eat away at corporate profits. So that's kind of the general overall theme for automakers and in particular airlines. And that was headlined by the UAW starting a huge labor strike on Friday morning. So the UAW is expected to ask some automakers for as high as 30% increases in wages across the board. So if you take a combination of increased labor costs and the increased fuel costs that we've seen, energy prices that have continued to go up, that is causing a lot of these companies to take that out of their profits and becoming more and more pressure on these companies to make money. Those fears started to drive the stock market down on Friday. Other thing in investment news, so Bank of America Research came out with one of their monthly research reports. They're stating that now is a good time to make a portfolio shift, to shift out of some of the high-flying tech names and start to reallocate more into equal weighted index, emerging markets minus China, private credit, and commodities. So that is where Bank of America is typically suggesting for right now a tactical shift within your portfolio. Last piece of information for any of you investment geeks out there, Howard Marks. So Howard Marks is a legendary investor. He's written several books on investing. Mastering the Market Cycle is one of them. The Most Important Thing is another one. He is a fantastic investor, and I'd say he's almost equally as good of a writer. And he comes out from time to time, he releases his memos. So these are typically about 10 to 13 pages long, where he will state his opinions on what is going on with the market, and also what are some lessons that he's learned throughout his years. So he wrote one that came out this week. I highly suggest that you take a look at the Howard Marks memo for this week, where he talks about what is more important in investing. Is it to reduce the losers that are in your portfolio, or is it to seek out and be more aggressive and try to find the winners? So their philosophy that he has used throughout his investing career has typically been to find the winners, make tactical shifts, but also try to avoid the biggest losers. So maybe more of a conservative approach where you don't get the highest of high returns. However, when the market does come down, by holding less losers, obviously the portfolio can remain a little bit more stable. So there are some investing trends that have taken place this week. For those of you that have been following along, if you'd like this video, go ahead and like and subscribe. Maybe share some of your comments of what you've seen throughout the investing world for this week.